in the current circumstances, unlikely that people will keep money in Indian rupees because it's very difficult to kind of pull money out. And that before US actually became the global currency, actually the global reserve currency was dollar. Like while people may believe it was pound or whatever, but it was the ability of the currency to kind of convert into gold that kind of determined it. So, and because this is the case, there is also maybe next question we'll go there, which is there likely a move towards multiple reserve currencies or so on and so forth? But because of this, it's highly unlikely to happen. So now kind of your two
So
cents
it
on
is starting to shift. So the shift is going to be glacial, but the shift is very much underway.
So very slow, maybe it'll take 30, 50 years or something of that nature.
Yeah, I mean, 30, 50 years may be too long, but at least 10, 15 years,
Right.
and most likely longer. Trade flows are now a lot more distributed than used to be the case 60, 70 years back. So Asia, for example, as a trade bloc is now much larger. In fact, Asia's global share of GDP has gone up significantly.
Correct.
So the domination in terms of goods and services trade that the US had is no longer that clear, right? And it's no longer as dominating. And therefore, it is possible for a group of countries to start invoicing in different or in a local currency. So, for example, say China and Saudi Arabia. So there's a lot of oil that China buys from Saudi Arabia. There's a lot of manufacturing goods that China supplies to Saudi Arabia. So they can do their transaction in local currency.
Provided trust and ease of exchange, etc.
Correct. So you can still do it, right? So for example, say the rupee trade in oil with Russia.
Right.
So despite the fact that Russia has a big surplus with India, a significant amount of invoicing has happened in rupees.
Right.
But so long as you're right that they trust that India will be responsible with the rupee and will not force a very rapid devaluation. And similarly, if China has to think about making an RMB or the CNY, the renminbi to the Chinese yuan to become an alternative to the US dollar, they have to first keep it steady and stable. So you cannot let it sort of be very volatile because then people start worrying about it. Second, as you were saying earlier, you need to open up your capital account so that people are comfortable holding CNY or assets which are sort of valued in CNY. Because if they are not and the capital account is not open, then they'll always be circumspect about, what if there were sudden restrictions, then I will not be able to take my money out. So, which is why these things take a while to shift.
Right.
Remember that the US became larger than the UK in economic size sometime in the 1880s, 1883, 84 or something like that. But the pound was still the reserve currency till 1932, 33. Right? So till the time that they broke their peg to the dollar, to gold, the pound was still the reserve currency for international trading. It's only after, so it takes 40, 50 years or took 40, 50 years.
Right. And some event like World War was perhaps an event where
yes. Well, in this case, it was I think the choice after the First World War to sort of peg the currency back to gold, which led to problems in the UK economy.
Right.
And that created. I mean, so there are several monetary factors that drove that, but yeah, it's not necessary that just because China's economy is big that it becomes an alternative to the US dollar. But remember that there are some other very interesting changes that are happening. So we discussed the Triffin dilemma, right? So there is also now called the new Triffin dilemma, which is that one of the reasons that people feel comfortable holding assets valued in US dollars, like US treasuries or other types of assets, is that they think that the US government is serious about honoring its commitments, meaning that if it has issued, so there was at least an attempt for the US government to keep its debt to GDP, the sovereign debt to GDP ratio, like how many dollars has it valued, has it borrowed, and what is the economy which is supporting it, the size of the economy. So that ratio is very important. They were trying to keep it in a range, but if you see the current projections over the next 10 years, the US debt to GDP, sovereign debt to GDP, is likely to go significantly higher than it was even at the end of the Second World War. Now, if you have that level of fiscal expansion and debt to GDP increase, then it is natural to assume that the markets will start feeling a bit jittery about their ability to keep the dollar stable. So if inflation in dollar terms, so if in the US economy becomes very high, some of these transitions can actually get accelerated.
Right.